let's see the factors affecting the amount of depreciations. Original or historical cost is the number one. Expected life and estimated residual value. These are the three factors are there. Okay. See, the amount of depreciation, I represent that being D, amount of depreciation, is nothing but depreciable as a depreciable value divided by the life. Depreciable amount by life or number of years of life. This depreciable amount is nothing but original value minus scrap value is the depreciable value divided by number of years. Okay, the life of the asset. Now, among the three, which is the clearly known figure, original value or scrap value or the number of years of life? Among the three, which is the clearly known one? Nothing. Original value is also not known, scrap value is also not known, and life of the asset is also not known. In our studies, in our school study, we thought that depreciation seems to be one of the easiest chapters. But in a practical life, this is one of the toughest chapters. How many years will you live? Will I live? No one can predict. How many years that particular asset I purchase will work? I'm not sure. Sometimes I purchase a mobile, happens to be 4 or 5 years of life, but suddenly got malfunction in a matter of 1 year. So we are not sure. So life is also not sure. Scrap value, how do you know? The asset after 5 years will be valuable for 5,000 or 10,000 rupees. You are not able to predict that also. So life is also a non-predictable one, and scrap value is also non-predictable. Predominantly, you can at least guess the original value at least. There also some problem exists. Anyhow, at the inter level and subsequent level, you learn that in detail, original value. How that original value will not be static number, cannot be determined that as a static number, why it is also changing. I could have purchased one asset from foreign, probably $1 lakh. The seller in foreign country may say, sir, you can take 6 months time to pay it off. Okay, very happy because he has given me credit to repay that after 6 months. So I purchased it for $1 lakh, $1 lakh. He gives me 6 months time. Very happy. 6 months time is there, right? But at the time of purchase, $1 is equal to rupees 75. 6 months later, $1 is 80. Now, while repaying, I have to pay 5 rupees excess per dollar, right? He says, you just give me dollar, but I'm in India. When I start paying that money, he says that I need $1 lakh. So when I verify the dollar rate in the local market, it's 80 rupees. Oh my God. Unwantedly, now I'm paying 5 rupees excess for the same asset. Now, what's the value of the asset? At the time of purchasing the asset, I could have shown the value of the assets being $1 lakh into 75 rupees in terms of Indian currency. Right, $1 lakh, $1 is 75 rupees. So 1 lakh into 75 lakhs is the value I supposed to thought. But on real payment, I had to pay 80 rupees per dollar. So 80 lakhs is the value. I had to adjust the original value also. So then how do you calculate the depreciation? So many adjustments are there. You have to think over in practical life. Anyhow, we'll confine that all the three numbers known first of all. If all the three numbers are subject to change in the later, how do I treat the accounting or depreciating that? We'll study the second part. That's what about the professional education part. We'll be studying that. First part is the basic. I try to finish up the first part, which is nothing but calculating the amount of depreciation blindly, assuming that the original value, scrap value, and life of the assets in years is also known. Practically not possible. All these things will be changing. If all the things are changing, how do we calculate the depreciation? What could be the impact and the amount of depreciation in the subsequent period will be studied as per AS number 10. Property, plant, equipment, the valuation process and depreciating process. given in accounting standards number 10. At the intermediate level, you will be studying in detail of these things. At foundation level, you will be having that knowledge and only one idea you are going to implement in your examination. And if you are being the CMA foundation, very simple, you will be confined with the first level, especially straight line method of depreciation as well as WDV method of depreciation. Ahead of that, you don't need to study anything. Right, if I am aware about these things, very comfortable. So two aspects to be studied here. One is method of depreciation. Next one is accounting of depreciation. Accounting. How do I pass journal entry for depreciation? We will be studied in the second part. In methods of depreciation, we have n number of methods of depreciation, around 11 or 12 methods we are supposed to study for the CA foundation. And among the 11 or 12 methods, two are predominant. Straight line method of depreciation as well as written down value method of depreciation are the predominant one. Apart from that, we have some other methods like annuity method, sinking fund method, insurance policy method, production units method, kilometers traveled method, and production liters method, kg methods, replacement cost method, and repairs provisions method. So many methods we have. Some of the years digits method. In this very first class, I am going to deal with the method. That too, very first one is SLM method, straight line method of depreciation. Another one is WDV method of depreciation, written down value method of depreciation. So these are the two are going to be studied. And how do I account that in my books? I have to record that in my books? No. Again, in that also we have predominantly two models, and second model will have one variation. So we'll understand this way. Okay, two models of accounting the depreciation, and there are, of course, we have the variations. Okay, one more variation. Okay, one is direct charge of this depreciation to the P&L account. Another one is creating the provision model, provision for depreciation. One model where I am debiting the depreciation to the P&L account. Another model, I am creating the provision. The depreciation is adjusted in that assets. Another case, the depreciation is accumulated in the provision for depreciation. These are the two models. In these two models, again, we have at the time of sale one more different types of accounting. While discarding the asset, how do I treat that? So you have to understand two methods of accounting in detail. So two methods of accounting in detail. One is deducting from the assets. Another one is accumulating in the provision for depreciation. In methods, two methods are most important. One is SLM method. Another one is WDV method. Is that okay? And subsequent further learning, as you are aware about that, the factors affecting the amount of depreciation being original value, scrap value, and the life. All the three are not static number. It will be changing. If these three are changing, then you have to incorporate those changes in the calculation of the depreciations also, right? Let's start with the first illustration. Calculation of amount of depreciation under SLM, WDV, sum of the years digits method. Let me first confine with the SLM method, sum of straight line method. Then I will go for the WDV method. And what is the formula for calculating? So I will just start with SLM method. What is the formula for calculating the amount of depreciation? As three factors are there: original value, scrap value, and life. Capital D represents amount of depreciation. Capital D represents amount of depreciation. I am using that notation. Small d represents rate of depreciation. Amount of depreciation is different and rate of depreciation is different. It should not have any confusions. If it is a round number, then it is amount of depreciation. If I am mentioning that in person, then it's a rate of depreciation. Rate of depreciation in small d is represented in small d. Capital D, that is nothing but amount of depreciation is nothing but original value minus scrap value divided by life. This is the amount of depreciation. Let me see in this illustration. Calculate the amount of depreciation under straight line method, written down value method, sum of the years digits method. These are the three methods. So we'll leave the last method. So first of all, we'll confine our understanding with the first two methods, straight line method. The two straight line method very first of all. And past journal entry. The past journal entry is nothing but accounting of depreciation. We'll deal it later. And its scrap value at the end of the useful life could also be given here. So original value being 65,000, scrap value being 5,000, life being 4 years. The asset sold for 10,000 rupees by the end of fourth year, I'll keep it pending currently. Okay, currently I'll just keep it pending because it's going to be incorporated while accounting the depreciation only, not required for the depreciation calculation. Now come on, tell me what is the amount of depreciation? Apply the formula original value minus scrap divided by the life. So you see, you no need to mug up this as a formula. I purchased it for 65,000 rupees. It will be only 5,000 rupees by the end of fourth year, means you are losing 60,000 rupees over the period of 4 years. Per year you are being the loser of 15,000 rupees. Is that okay? Let's see here. 65,000 minus scrap value being 5,000 and life being 4 years. 65,000 minus 5,000 divided by 4, 15,000 is the amount of depreciation. This is called amount of depreciation. Rate of depreciation. Rate of depreciation, how do we calculate that? Rate of depreciation is very simple. Yeah, amount of depreciation divided by original value in percentage. Original value in percentage, O. So the O here being 65,000, so D being 15,000, original value here being 65,000. If you represent that in percentage, what's the value you are getting? Yes, come on. What's the value? Yes, use the calculator. That's why I told you. Always play with the calculator. 23.08. 23.08. Am I right? 08 percentage. Clear? You might have studied that in the preliminary studies itself. Now I am going to deal with the next aspect. Right. Clear? Yes. Okay. Hope now you will be clear with this. Depreciation was already calculated. Now for the WDV method. For WDV method. Now, when it comes to the WDV method, again you have to understand some additional data. In case of WDV method, the depreciation can be calculated using a formula. Rate of depreciation under WDV method. This is WDV method. Nth root of 1 minus nth root of scrap value divided by original value is the rate of depreciation. This is the formula. Is that clear? How much? N is nothing but here. S is scrap value. O is the original value. Here the N being 4 and scrap value being 5,000 rupees and original value being 65,000. 65,000. Is that okay? Now you have to calculate this. Calculate as per my working here. 1 minus 4th root of 5,000 by 65,000. Then 4th root of 5,000 by 65,000. What is the value? 5 by 65. This value being 0.076923. You can take at least 4 or 5 digits. So the more the digits will give more accurate answer. Clear? So the rate of depreciation under WDV can be calculated using this formula 1 minus nth root of S by O. S by O. Now how do I get this value? 4th root. So that's why I told you to bring always calculator and use a calculator. So in your calculator, you can calculate this value. You are not allowed to use the scientific calculator. You are allowed to use only the standard basic calculator. I just changed myself to the basic calculator. Okay. Root of point 0. Okay. 0.07692 This is root. Okay. Root. Okay. I am taking the root. Is that okay? Root of 0.07692 is 0.277349959. Verify that. But it's not root. Fourth root. Fourth root means you have to take again one more root. Root of root is the fourth root. I'll take once again. Second root. The answer being 0.52664. 0.52664. Okay. 1 minus 0.52664. Is that clear? Are you able to get this answer in your non-scientific calculator? If you are allowed to use the scientific calculator, you can directly get it. But if you are not allowed to use this, then you can use the shortcuts. I have given complete tricks how to use the calculator also explained as a calculator tricks in a separate playlist available in Singar Academy website. Go and see that. 1 minus 0.52664. So the final answer being 0.47336. I can represent that in terms of percentage. If I am representing that in terms of percentage, the answer being 47.34%. I can round off to the 2 digits form. So the rate of depreciation, the WDV method here is 47.34%. Hope you are now clear with this. Now I'll use here original value on 0th period, value being 65,000 rupees. I am going to calculate the depreciation under straight line method, SLM method of depreciation. Depreciation for the year 1, you have to apply what? 23.08% on the original value. Straight line method of depreciation is nothing but applying the rate of depreciation on the original value. The original value is 65,000, on that 23.08% is applied. Come on. Tell me. The value being 15,000. Am I right? Verify. Use a calculator. Am I right or not? So after subtracting the depreciation, the balance what you get is nothing but WDV value. That is called WDV value, written down value. Understand the difference between the WDV value and the original value. Whenever I use the word WDV, it represents the value of the assets after depreciation. By the end of first year, the value of the assets after provision of depreciation of 15,000 is only 50,000. Okay. Once again.